Today we're looking at what is inflation. Hello, welcome to the Daily Bellringer. Please don't forget to subscribe and take a look at the questions down in the description. Also, don't forget to check out dailybellringer.com where you'll find more resources that go with many of the Bellringer videos. Inflation is a term that you hear a lot in the news and discussed by politicians. But what is inflation? Inflation is the rise in prices of goods and services within an economy. One simple way to visualize inflation is a balloon that is being inflated, getting bigger and bigger, meaning that prices are getting higher and higher. But inflation also means your dollars are getting smaller and smaller because they do not buy as much as they did before. Economists use the term purchasing power to describe the amount of goods and services a certain amount of money can buy. As prices go up, consumers' purchasing power goes down. Each year, inflation occurs, and economists track the rate of inflation by measuring the increase in prices over time. So for example, let's say you go to the grocery store and buy a gallon of milk for $1. Exactly 1 year later, you go back to the exact same grocery store and buy the exact same gallon of milk. Yet now it costs you $1.10. That means the inflation rate for that year was 10%. Historically, inflation in the United States has averaged somewhere around 3 to 4% each year. But there have been several spikes in inflation throughout history. During the War of 1812 and Civil War, there were jumps in prices of goods. Then during World War I, there was inflation rates as high as 18%. Then again, in the years after World War II, inflation rates spiked over 20%. In the 1970s and early 80s, oil shortages contributed to inflation rates as high as 14%. And currently here in 2022, in the post-COVID pandemic economy, rates have risen to close to 9% and continue to rise. There are many factors that contribute to inflation, and as economies grow more complex, it's difficult to point to one exact cause. One major factor is supply and demand, which is the relationship between the quantity of a good or service and the amount that consumers wish to buy. If there's a large supply of an item but little demand for it, the price of that item will go down. If there's a large demand for an item but little supply, then the prices will go up. This is sometimes called demand pull inflation, when the demand for goods and services cannot be met. For example, during the mid-1980s, the Nintendo Entertainment System, or NES, was extremely popular. In 1985, the NES cost around $150, but then because demand was so high by 1987, it rose to $180. Another factor is called cost push inflation, in which the cost of material or wages increases. Wages are dependent on many factors, but one simple example would be minimum wage. Minimum wage rates are generally established by states, so let's look at the state of Illinois. In 2010, the minimum wage in Illinois was $8.25 per hour. Then presently in 2022, Illinois' minimum wage is $12 per hour. That is a 45% increase. Many times those costs for increased wages are passed down to the consumer, resulting in inflation. Yet another factor that contributes to inflation is the amount of money in circulation. The Federal Reserve of the United States controls the amount of money circulating in the economy and attempts to maintain a balance between the currency circulating and the rate of production of goods. If the amount of money in the economy is higher than the rate of production, then inflation typically occurs. Furthermore, government policies and regulations can have an impact on the rate of inflation. If a government injects a large amount of money into an economy through a recovery program or stimulus, it could cause inflation by driving demand for goods up higher than the rate of production. Another example would be if the government decreases a tax on a certain item, it might cause there to be a higher demand for that item, and there might not be a high enough supply of it. This would again likely cause inflation. Hopefully you can see that inflation is a complicated issue. As I said before, there is not really any one cause of inflation, and it is extremely difficult to identify its root cause, but nonetheless, economists, politicians, and every consumer, which is basically everyone, will continue to debate and argue about inflation. So with that, hopefully you learned something, and thanks for watching.